Stocks swing between gains and losses in a bull-bear tussle ahead of the weekend and Christmas holidays. Energy and metals exhibit strength, while IT and industrials are the big drags.
Accenture delivers a strong performance and ups its guidance, with Gen AI also gaining traction, but analysts remain concerned about the continuing weakness in IT deals that may continue to weigh down on the Indian IT sector.
Exide gains after its EV battery arm strikes a supply deal with Hyundai, while Amara Raja Energy perks up as the Korean auto major becomes first auto company to introduce made in India AGM technology batteries.
Bharti Airtel outperforms after it prepays over 3,600 crore for all spectrum acquired till 2016. Now with this, the telecom major has prepaid over 28,000 crore worth of spectrum dues in 2024.
CNBC-TV18 learns that Flipkart is looking to shift its domicile from Singapore to India for regulatory ease and better governance. This move will also likely pave the way for an IPO in the next 12 to 18 months.
Good afternoon. You're with us here on Halftime Report on CNBC TV18 this Friday afternoon. I'm Hormas Patakia. With me is Manglam Malu. Well, Manglam, if you look at the screen, it looks like a very quiet day, but it has been anything but quiet since the morning. It's been an absolute roller coaster. If you look at that intraday chart of the Nifty, up 1 minute, down the other. And that's exactly what comes up on your screen as well. Off the lows of the day, exactly at the flat line, but it's not been a very good week, particularly for the bulls for that matter. It's down, the Nifty is down almost 3.5% as we speak, below that mark of 24,000. But that does not mean that the market, it's been all gloom. There have been plenty of stocks that are doing well. The broader markets are okay as of now. The small cap index has slipped into the green as we speak. And the mid cap index too is trading with losses of around 0.4%. But plenty of other stocks that are moving around, and in fact, most of them hitting record highs as well.
A lot of them hitting record highs. You know, small cap index is actually in the green, even as the frontline indices are under pressure. The mid cap index down about 0.4%. You speak about volatility in the market. You know, nothing describes that volatility more than the advanced decline chart. If you look at, you know, the way those lines have tussled with each other and intertwined, moved around. Now, you have the red line a little above the green line, but they are coming closer. Remember, in the morning, the first hour of trade itself, there has been a fair amount of jumps and declines in that itself. A bunch of stocks which are doing well. Aegis Logistics up around 8%, Religare up around 7%. We have decent traction seen on names like Latravenues Tech, Ixigo. The management joined us yesterday speaking about good trends in the last month of this year. And Pratap Snacks, from the word go, has been higher by almost 13%. But speaking about growth prospects and companies, let's get chatting with the management of Pokarna on our show. It's the first management that joins in to give us their business outlook for the year going ahead as well. We do have with us the leader of the company. We do have, Paras Jain, who's the CEO of Pokarna, joining in. It's been a big mover all of this year itself. Thanks a lot, Mr. Jain, for joining in. First half of this year, 23% revenue growth, 28% EBITDA growth. You had earlier targeted 15 to 25% growth for the entire year in terms of top line, with 30 to 35% coming in the quartz business and slightly muted performance for the granite business. As things stand at the first 9 months of this year, do you maintain this guidance? Do you believe you can do better? Or if you could give us a specific number, 15 to 25% overall growth is fairly wide. Would you be closer to 25 or closer to 15?
Thank you for having me on the show. So on the quartz side of the business, we are expecting over 30% growth now for the full year. So if you see the performance for the first 6 months, we expect that the numbers of half year would typically be repeated in the next half of the year as well. On the granite side of the business, we think that the business will continue to be muted as it has been in the past. But the more growth and visibility which we are seeing is more on the quartz side at this time.
Paras, good afternoon. Thank you for joining in. You had mentioned earlier that your efforts are directed towards getting the granite business back in towards profitability in FY25. Do you see that happening with 3 months to go for the year to end, or what is the expected timeline for this business to turn profitable now?
So I think that's going to take a little more time than what we originally envisaged. But I think we are going to make it up more from a quartz side in terms of compensating. But of course, that's not compensating for the granite business, but we see more growth and visibility, possibility all happening at the quartz side of the business. Granite has got its own challenges with the Chinese demands, and in general, the product has got a shrinking application in the global market and as well as in India. But then having said that, we are making efforts to make sure that we try to contain the losses as much as we can or reduce the business to a level where we can manage it in a way it's more sustainable in the long term.
So for the full year, your earlier range on the revenue was 15 to 25%. Where does it end? 15 or 25?
So I think on a quad side of business, we would typically end with 30% plus revenue increase, is what we are seeing at this time.
All right, you aren't giving a commitment for the entire business itself. Let's talk about, a couple of things. One, performance of the US markets, how the demand is out there. You did allude to improving prospects out there because of the rate cuts that have happened. But the next year, now the Fed is saying just 2 rate cuts instead of 4 earlier. Then you have a new, president joining on Jan 20th itself. What does all of this bode for the US business? If you could give us an outlook of what you are foreseeing in FY26.
See, we think that the US market is still improving than what it was in the recent past. And we believe that the commercial market is also going to improve in the US going forward. And of course, whatever Fed has recently said about limited rate cuts, but I think whatever they have done so far, typically and with buoyancy being expected with Trump being back and the constructions, what have been held up for a long time. A lot of our customers and the channel checks tells us that many builders are relooking at the projects, and the groundbreaking is probably going to happen once the new president takes over and has some more visibility for the economy given. So I think overall we see that FY26 is going to be a good year for the US and for us also in general.
How much is US as part of your overall business, Paras?
90% of over 90% of our product goes to the US.
And you expect that to remain at these similar levels, or do you expect the domestics to grow a little more?
Domestic and other markets would grow, but typically the volume is so much in the US that whatever you do, it's very difficult to really make a big impact in the percentage there. But I think while the other markets would grow, US will typically continue to be our primary market.
All right. So FY26, what is the kind of growth that we can expect in the US? Because, you have a new line coming in. There is Krios and all the other products that will start selling in the fourth quarter as well. So FY26, what should the revenue profile of the company look like in terms of growth and products?
See, basically FY26, we may be commercializing our new line by the end of FY26. So we don't expect anything much to be contributed by the new capex which we announced in FY26 revenues. So I think what we would have typically would be coming from our existing assets or whatever this Chromia and Krios, what we are going to add. So typically I don't have a number to give you for 26 at this time, but I think there's going to be a sizable, reasonable growth.
What about this capex itself, the 440 crore capex that you have, which comes on stream by the end of FY26? What are the typical asset turns on this, of this 440 crore? What is the annual revenue projection?
So typically we project about 1 to 1.25 tons, basically. So typically that's the number what we are expecting. But I think, as I've told in the previous calls and also in general, that our focus is more on improving the bottom line and the margins rather than chasing the top line and then just making the numbers.
Final question, Paras, very quickly. What is the timeline on the sale of your apparel business? Is there a timeline? And if that happens, what is the kind of value you're expecting from that?
So typically, currently the apparel business is a discontinuing operation. So the business is almost completely wound up. So we are actively looking for the partners, but we don't have yet found anybody. So I think the large part of the monetization there would be of land and building and some part of machines. So we don't have a number at this time to give you, but I think it's going to take some more time to get that business off.
All right, we take that point. We'll speak to you after the third quarter results to get a better sense into what your projections for the next year are in terms of margins and the outlook in terms of what the apparel business is doing as well. And we'll find out how Krios and Chromia are doing as well. Thank you so much for joining in and giving us an update in the middle of the quarter for your business. We take a short break. As we do that, let's introduce Growth Code, a special initiative by Grow and CNBC-TV18. It's the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on November 9th to share their valuable insights and strategies. A snippet of Arjun Tandon, partner at Kailasa Capital Advisors, sharing his thoughts on the risks of trading with small capital. Let's listen in.
Let us say anybody who wants to do option selling, तो ऑप्शन सेलिंग में लगभग 1-1.5 लाख लगता है पर लॉट. अब अगर आपको इन सारी चीज़ों का बेनिफिट उठाना है, आप चाहते हो कि मैं थोड़ा डिफरेंट इंडाइसिस में काम कर लूँ, थोड़ा पोजीशन साइज एक्स्ट्रा रख लूँ, तो मुझे लगता है 10 लाख 15 लाख इंडेक्स के लिए आपको चाहिए ऑप्शन सेलिंग. उससे कम में आप जाओगे तो इट इज़ डिफिकल्ट टू सस्टेन. सी इम्पॉसिबल कुछ नहीं है, हर चीज़ प्रोबेबिलिटीज़ की गेम होती है. प्रोबेबिलिटीज़ आपके अगेंस्ट होती जाएंगी जितनी छोटी कैपिटल के साथ आप मार्केट में आ रहे हो. अगर आप सेम ऑप्शन सेलिंग स्टॉक्स में करना चाहते हो तो नेचुरली आपको डिफरेंट स्टॉक्स में पोजीशंस बनानी पड़ेंगी. कल को किसी भी स्टॉक में कुछ भी न्यूज़ आ जाती है तो वो आपके अगेंस्ट जाएगा. तो स्टॉक्स में अगर आपको पोजीशन बनानी है तो आई फील 20 लाख के आसपास आपको चाहिए, सो दैट आप एक डिफरेंट नंबर ऑफ स्क्रिप्ट्स में आप ट्रेडिंग कर पाओ.
Back with us here on Halftime Report, and it's time for our Indianomics segment. And the US Federal Reserve has cut interest rates by 25 basis points, but has signaled for fewer cuts in 2025. Nalata Venkatesh caught up with Sajid Chinoy, the head of Asia Economic Research at JP Morgan, and spoke to him on global macro environment post the Fed's decision and how it can impact the RBI's rate cut decision in February. Listen in.
I think we should be prepared for quite a treacherous global environment in 2025 because there are two distinct and potentially reinforcing shocks in play. And I think it's important to disentangle both of them. The first one, which occurred with the Fed this week, really should not be a surprise for those of us who've been watching the US economy quite closely. The premise that the Fed would cut meaningfully in 2025 was based on the fact that the US economy would slow and inflation would head towards its 2% target. But what we've been seeing all year long is this remarkable US resilience. Despite monetary policy being tighter by historical standards, the US economy, even in the fourth quarter, is still growing at 3%. So forget recession, we had 3% growth in the fourth quarter. And this has been a story all year long, propelled by a very resilient US consumer. Now, what that's meant is that the last mile of disinflation is getting much more difficult for the Fed. The fact is, if you look at the last 3 or 4 months and you look at the momentum of core inflation in the US, it's actually running at an annualized rate of 3.5%. So we're very far away from 2%. So it was no surprise that having engineered the first 100 basis points of rate cuts, I think the first 100 basis points was non-controversial given how elevated starting points were. For US policy to go from 5.5 to 4.5, was not controversial. Now, beyond that, the Fed will have to move much more cautiously for two reasons. One is, as the Fed chairman said, there's so much uncertainty, and we've talked about the Trump administration, that when you're driving on a foggy evening, you want to go slowly. But secondly, given what's happened in the US economy, there's uncertainty now about the neutral rate. There used to be a belief that the US neutral rate was at 2.5%. The Fed has slowly been marking that up towards 3%. I won't be surprised if that neutral rate is much higher than that. So for both these reasons, the Fed has the space to ease much less in 2025. Now, related to this is the Trump tariffs, because if you do get Trump tariffs, what the risk is that you will reinforce some of these dynamics. Two big parts of the economic agenda for the new president is A, tariffs, and B, slowing the pace of immigration or resulting in deportation. And the dirty little secret is that high levels of immigration have allowed the US to grow at these levels and kept some lead on inflation. If you were to simultaneously slow the pace of immigration and put on tariffs, that is an adverse supply shock, which will push up inflationary pressures even more and will hurt growth. Of course, the US is hoping, equity markets are excited for the most part, because they believe, at least in the US, these two adverse supply shocks will be offset by deregulation and easier fiscal policy. The bottom line is there is uncertainty which could push up inflation further next year. We saw that in some of the forecasts of the FOMC members, and therefore the Fed has to move closely. What all of this means, and I'll end with this, is that the US exceptionalism that we've seen in 2024, higher growth, stickier inflation, therefore higher rates, that could get reinforced in 2025 by some of President Trump's policies. And that's why the dollar today is at a 2-year high. And that's why bond yields have backed up again.
Okay. Well, let me straight away come to India and, time permitting, go back to some of the global issues. See, we had almost started penciling in a rate cut from the Reserve Bank in February. But now, with the dollar getting so strong, likelihood of say the rupee at 85.50 or 85.30, imported inflation, and the fact that the Fed may not cut very soon in the first half of 2025, does the hope of a rate cut from the Reserve Bank fade?
So I think, having tight global financial conditions affects all emerging markets, some more than less. I would argue India is impacted relatively less because we still have very high external buffers. And I keep going back to the point that the India-US policy rate differential back in 2018 used to be 500 basis points. Indian policy rates were 5 percentage points above the US. That narrowed at its bottom all the way to 1 percentage point. And that's another way of saying India did not have to hike in lockstep with the Fed. We had bought ourselves some independent monetary policy because of the quantum of reserves. So just because the Fed is cutting less doesn't preclude the RBI from cutting. I think what will matter more from India's perspective is what's happening with inflation. We're still expecting December CPI to be sticky at 5.5%. So two things will matter going forward from the first quarter. Are we going to see food inflation roll off? That's the hope, given that we've had a strong Kharif harvest, and Rabi should be strong as well. Hopefully food inflation rolls off. And the second is the point that you made, that I think it's important, if the dollar is stronger and all exchange rates are depreciating, that India's exchange rate does not become uncompetitive. I hope at some point we talk about India-China. So if the exchange rate has to become the shock absorber, which it must in some circumstances, there'll be some imported inflation. The good news is we're starting off core inflation at a low level at about 3.5%, 3.6% has been the average over the last year. So hopefully we can absorb some currency depreciation and imported inflation and still have inflation in the 4 handle in the coming months. So there are a lot of ifs in that statement, but if you do in a situation where inflation is in the 4 handle, I think monetary policy will have some space to move in 2025, given the quantum of external buffers India still has. So you use the FX intervention on the dollar front, and you use interest rates to handle domestic conditions, and therefore you've got 2 instruments for 2 objectives.
Well, if you look at just the frontline indices, you would realize that there hasn't been much change. But look beyond that, look at the intraday chart, and there would be a fair amount of volatility as you're looking at on the Nifty itself. Currently, the lower end of today's trading range. And perfect time to get you an FNO update for the day itself. Volatile day of trade. The Nifty Bank is actually an underperformer in today's trading session with a cut of almost 0.5%, and the mid-cap index falling a little more as well. So we'll keep an eye out on all these as the advanced decline chart tells you about the broader market weakness a lot more, with the red line still above the green line itself, and now those lines are widening. So we were just talking about them trying to come close. This line typically tells you, how volatile the day has been in today's trading session so far. The only solace that we have is that the Nifty is still above the 200-day moving average of 23,826. That's a positive. The Nifty Bank is struggling below the 100-day moving average. So can it cross past that if there is a recovery in the second half or not? Is something we'll be watching out for. From the options end, I'm looking at the 24,000 call. The Nifty below that 24,000 makes it very easy for the 24,000 call writers to go ahead and take positions on that one. Short positions on a 24,000 call would give you some resistance around 24,150 on the Nifty. And we're also seeing some writing at the 23,900 call, telling you that around 24,100 to 24,150, there is a fair amount of supply on the index itself. At the lower levels, though, some writing at the 23,800 put, telling you that there could be support around that 23,700 mark, closer to the 200-day moving average itself. Some stocks on our radar. We have Adani Green, NMDC, Delivery, all of them in focus, seeing some sort of short covering, though deliveries come off the highs. And two stocks in particular, Exide may enter F&O ban with the open interest build-up that we've seen on the stock, and PVR Inox on a Friday may get off the F&O ban. So we'll keep an eye out on that one. Hermas.
Perfect Friday for PVR if it comes out of the F&O ban, I guess. But yes, it's 20 points away now, the Nifty from its from that 23,826 level that Manglam was highlighting. So we'll keep a close eye on that level. But time for a short break here on Halftime Report. More on the markets, and we also connect with Abhi Singhi, the managing director and senior partner of the Boston Consulting Group, to decode the FMCG consumption trends. Stay tuned.
Welcome back. The big talking point over the last couple of quarters has been the weakness in the FMCG sector. But remember, last year itself, BCG in its presentation did talk about FMCG volume growth lagging GDP growth, and that was then the talking point as well. 1 year later, not much has changed, but still a lot has changed. Affluent households moving out of the FMCG consumption. That's what data tells you, because FMCG volume growth, which over 2007 to 2003 has been at a compounding close to around 3.4%, affluent households over the next 10 years are expected to grow at a compounding of around 10%. Would that mean higher share of revenues for FMCG? Perhaps not. Why is that? Because if you look at the percentage spend of affluent households in categories, it's only 32% for FMCG. Where are the rich spending? They're spending more on, apparel. They're spending a lot on cars, 90%, and 94% or 91% coming in on leisure travel itself. We speak to a lot of the hotel companies who are talking about that as well. Affluents, while they spend 3 times the average on daily essentials, what they spend on a lot more are leisure and entertainment, as well as, cosmetics and indulgence, close to 26 times the average spend. So we'll keep an eye out on that one, because that could be an opportunity for consumer companies. And also, what's interesting is over the last 12 years, goods, while they've grown at around 8 to 9% CAGR in the consumption space, services has grown at around 11 to 13%. So what does all of this entail for the FMCG sector in terms of risk, opportunities, and what the forecast is? Well, we have the author of this report, Abhi Singhi of BCG, joining in. Abhi, the question is, what exactly is happening in the consumption space? Incumbents unable to grow, even as new age companies are scaling so fast. Some channels are growing super fast. Some channels are not growing. Rural people are saying, yes, was growing. Now they have money in their hands, could grow even more. Urban, which was earlier holding on consumption, is now seeing some slowdown. It's all happening, right?
Yeah. No, I think, first of all, Manglam, thanks for having me here. I think there's genuinely a consumption conundrum, right? Because on one hand, you see from a GDP data perspective, consumption holds steady at 60%, but then what is conventionally thought of as the consumption sectors, they are not growing so fast. So I think 3 things to just set it all in context. First of all, if you look at consumption at an aggregate level, that has held true at about 60% over the last decade or so. But if you look at FMCG as an example, or even if you look at some of the durables, they have not grown at that kind of a volume. So what's happening? We looked at it and we found that what the consumer is doing is, number one, shifting from goods to services.
Got it.
And even the NSSO data, which came out earlier this year, suggests that between 2011-12 to 2022-23, that's the same thing which has happened. So whether urban or rural people are spending more on services rather than goods. Part number one. Part number two is, like you mentioned, the affluent versus the middle versus the bottom. So if you look at it, the affluent households today, which are about 15 to 16% of the country, they actually are growing the fastest, but they are spending more on other categories compared to FMCG. So you're seeing that whether in FMCG, whether in durables, you're seeing that phenomena happen. But within that, I think there is de-averaged opportunity. So that's, I think, the third important point, because if you look at across any category within FMCG or broader, the premium segment is growing much faster.
Right.
And unpenetrated categories are going much faster. You know, that's why you saw the cosmetics and indulgences being at the 26 times because the starting point is very low. Just to give another example on the same, if you look at the durables, right? So you have TVs or refrigerators which are at a 70% penetration and a 40% penetration, and you find that the growth in those categories is not that high. But ACs, which are at a 6%, 7% penetration, they are, you know, seeing a lot of growth, of course, aided by what's happening from a weather and climate perspective as well.
You know, Abhi, good afternoon. Firstly, thank you for joining in. You know, since you mentioned like so many things going against FMCG, right? Is FMCG consumption now the best barometer to check a consumption demand related trend, because people spending so much on services, on travel, hospitality? Is FMCG still the right barometer?
I think that's a great question. And, you know, many times people would say, you know, there is an S-curve which is going to happen, right? And depending on who you talk to, they would say $2,000 or $3,000 is the tipping point. I think what people forget is the basket of goods and services which is available to the Indian consumer today is unlike anything which the Western European or the Chinese consumers saw 30 or 20 years back, right? So the share of wallet which is being competed for is a different one. So short answer to your question, FMCG, which was probably 15 years back, the best indicator of what was happening from a consumption perspective, today I think is a better barometer for maybe middle India or sectors, but at an aggregate level, I think the basket has to be broader.
Absolutely. And, you know, we see that as well. While there are companies which are struggling to grow volumes, there are concerts which sell tickets for, what, 50, 60,000 odd as well. So the urban consumption landscape has shifted. All of this boils down to just one big question. What should companies do? And what are you advising your clients to, you know, move out of this funk of slowdown and grow? Because that's all that matters to the viewers and shareholders of these companies.
Yeah. No, so I think, first of all, I would say there are companies who have done well even in this scenario. And if I look at common themes, there are probably 3 common themes which are coming out. I think number one is focus on value, right? So value for the consumer, which is what I would characterize as good product at great price, right? So I think those who have been able to deliver that have seen, you know, significant upside, number one. Number two, really focusing on channels which are exploding, quick commerce being the most recent example, but I'm sure that in the next 12 months, along with quick commerce, maybe social commerce will be the next big thing, or maybe it is, you know, the aided commerce in tier 2 towns. So I think that's the second, which is thinking about channels of the future. And third, I think, is what I would say the servicification of FMCG, right? So if earlier consumers were having, having their hair dyed at home, more and more people are actually doing that outside, right? So thinking about almost the institutional equivalent channel more strategically could unlock growth.
Interesting insights out there. Servicification of FMCG is something that we'll keep an eye out on, along with watching out for social commerce and aided commerce over the next couple of years. So you've always given us some ideas to think, and now for 2025, we have a bunch to munch on as well. Abhi, always a pleasure speaking with you. Thank you for stopping by and coming to our studios. Wish you and your team a very happy new year as well.
Thank you. Same to you and your teams.
All right. Okay, then with that, as we slip into a short break, here's some good news for all our viewers. India's business news leader is just a click away. As we do have Abhik in the studio. You would see to Abhik's right the all-new CNBC TV18 app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the CNBC TV18 app now from either the Apple Store or the Google Play Store. So there you have it. Abhik, you can look at it, and you can download that app, get all the updates on your phones as well. With that, we'll take a short break, come back on the other side, talk about the markets and a lot of individual stocks.
Back with us here on Halftime Report. At the day's low now is the Nifty below that 200-day moving average of 23,826 that Mangalam just mentioned a few minutes ago, and also below the 23,800 mark as we speak. 250 points now off the highs of the day, almost a percentage off the highs of the day. And Mangalam, you had...
No, it's just the IT index that I'm looking at. This morning it opened higher. The street was expecting it to continue to stay higher because of the strong guidance that came in from Accenture. And now look at the IT index, down around 3.5%.
There are many sector-specific issues as well, right, that a lot of these brokerages were highlighting, and not a very positive read-through that a lot of these analysts mentioned at the start of today's trading session. The metals index is still managing to hold on to some bit of gain, but there are most of the sectoral indices now in the red. The real estate index is now down 1.5%. The broader markets too are facing some bit of selling pressure as we speak, and the Nifty IT index is now down 2% as we speak. So these are some of the movers then, and some of the stocks that are now at a 52-week low. They include the likes of IndusInd Bank, Credit Access, Grameen, Aarti Industries, most of them at a 52-week low. If we can pull up the contributors as well before we slip into the break, and that will give you an idea what is pulling the index lower at this point of time, and it should be the index heavyweights, right? Be it the likes of HDFC, and there you can see the L&T, TCS, Axis Bank, Infosys. It is IT that is dragging the Nifty lower now below that mark of 23,800. Time for a short break. On the other side, Manisha Gupta joins in with Dilip Mohanty, the Senior Vice President of Reliance Retail. Stay tuned. Back on the other side.
Even as the big sharp fall for the market continues, the Nifty down 200 points below the 200-day moving average. Let's go across to Manisha Gupta, who is in conversation with Dilip Mohanty, the Senior Vice President at Reliance Retail. Manisha.
Well, thank you for that, Mangalam. Mr. Mohanty, thank you so much for joining us. And first of all, I want to know is how 2024 as a year was for you. I mean, we are at the last stretch of this year now, and we have seen so much movement, volatility from the international markets, Indian markets as well in sense of commodities. How would you put the year in perspective?
Thank you very much, Manisha, for having on your show. I think overall it's a good year, though the monsoon was slightly late. Some crops behave, all the crops behave differently, so it's very difficult to say how exactly it went. But overall, if you say, we are going at 15 to 17%, which is quite good. So I'd like to tell you how each crop has behaved last year. So if you talk of pulses, Tuar crop was short. We are carrying about 1 lakh ton carryover stock. Though production expectation was 34 lakh tons, it came around 28. So it was 29. Another 8 lakh tons is import that comes. All put together, it was 35 to 36 lakh tons. And our requirement is 42 to 43 lakh tons. There's a shortage of 7 to 8 lakh tons. That led to increase in prices. Right. The MSP was running around 70 rupees last year. The lowest price point we saw 92 rupees. The market went up to 118 by June. From Jan to June, it's gone up so much. After that, monsoon was good. After that, there was a bit of a sliding of prices come. Then very good acreage report that has come. That is just slowly, markets are sliding as far as tuar is concerned. Sure. Now the tuar is absolutely good. The new crop is coming now. Arrivals have started in Karnataka. Next few days it will come in Maharashtra and other places. The overall crop looks to be around 38 lakhs. 1 lakh carryover stock and 10 lakhs of imports that's going to come. So we are having about 48, 49 lakh tons against our consumption of 42 lakh tons.
So no
we have
comfortable pulses now?
Absolutely. I'm talking about tuar only now. So tuar absolutely no concerns. So this time as compared to last year, the lowest price was 92. We are looking at a price about 73, 74. It will just breach MSP number because MSP was 70 last year, now it is 75.50. Okay. So that will just slightly go down that. But overall, as far as upper side is concerned, it could be 84, 85 rupees, not more than that. So as far as tuar is concerned, we are comfortable. Okay. Then coming to China, last year we started with 15 lakhs of China with NAFED. Plus production, though anticipated about 10 million tons, but actually it turned out to 8.5 million, 85 lakh tons, totally about 1 million tons. That was slightly on the shorter side. We started the season with Gujarat mandis around 54 rupees. prices went up as high as 77 to 78 rupees. After that, government started import from Australia, about 8-9 lakh tons coming up, 1 lakh from Africa, all put together. So markets are going down, and now the report was okay, so. I mean, crop looks to be not very great, but it is okay as compared to last year.
Okay.
But overall, that 15 lakh tons which was government was carrying, that is not there. So you're starting a bit of a survey. So as far as China is concerned, next year will be slightly bullish. But it's too early to give a judgment on China.
I agree, but I want to know about rice as well. And as you said, the overall growth has been to 10 to 15%. Would you say much of that clearly seems to be coming in from rice?
I think all the commodities are going together. Rice going at 7-8%, atta also going 7%. All the commodities are going good. So dry fruits and spices, the categories which are going much faster as compared to the other ones.
Okay, and do you see that that this kind of a growth sustaining for across all these commodities as a sector?
Absolutely. No, but this time the crop looks good. Monsoon was fantastic. Prices looks reasonable. Considering that, we are looking for a very good year. As far as rice you are talking about, I'll say it in two parts. One is basmati rice, one non-basmati rice. Basmati last year we were carrying about 10 to 12% carryover stock.
Okay.
Production was good, slightly more than that. It remained in a reasonable level. But as far as non-basmati is concerned, certainly western part of India, the crop was short slightly, and south and east it was very much short. So non-basmati went up as 20%.
I just want to ask you one more question now. So since the budget is approaching, is there something that you would want to ask government when it comes to all of these commodities?
As far as only thing is that government should have a long-term policy, because short-term policies creates problem this side and for the exporters as well. It's a consistent and long-term policy. That's the only thing we can say. Beyond that, there's nothing. I think we should have continuous import policy as far as pulses is concerned, and government could have a duty. They can tweak the duty depending upon what is the local prices.
So, well, clearly that's the view coming in from Mr. Mohanty, that the growth across commodities in sense of demand has been on the stronger side, and long-term sustainable policies is clearly the ask right now.
All right, Manisha, thanks a lot for that. No such reprieve for the market right now, down almost 200 points for the Nifty. A bunch of stocks taking a knock. Siemens, the analyst meet is underway right now. The stock is down 7.5%. A big, sharp knock is what we're seeing on that. With that, we wrap up on this edition of Halftime Report with the news that Business Lunch will take all the market action ahead, and there is a bunch of them.